Hello and welcome. You're watching Business Today TV. I'm Sakshi Patra, and on this special edition, our focus is on the upcoming IPO. The company on our radar today is Concord Biotech. Remember, the company is Ahmedabad-based biotechnology firm, and it's set to launch its IPO for subscription on August 4th of 2023. The company is backed by late Rakesh Jhunjhunwala and Rekha Jhunjhunwala's firm Rare Enterprises as well. And the company has fixed the price band now of the IPO from 705 to 741 rupees per equity share. It is a pure offer for sale for about 20.93 million shares that will be offloaded by Helix Investment Holdings. Now, joining in to help us understand more insights about the company and the outlook going forward from here is with me. Ankur Vaid joins in. He's the joint MD and CEO of the firm. Also joining in is Mr. Lalit Sethi. He's the CFO of the company as well. Welcome, sirs, and thank you so much for taking the time out for this discussion. Mr. Vaid, to you first, could you help our viewers, and explain to them, what your core business is currently, the key products where you are market leaders in, and what do you seek to achieve by launching this IPO?
Thank you for having us. We are into the manufacturing of fermentation and semi-synthetic APIs, and that is something that we have always built on our expertise since inception. So till date, all the products that we do are in this space, and I would say that that makes us quite unique because globally there are a handful of companies in this area of fermentation. Um, we have a product portfolio ranging between different therapeutic class of products such as the immunosuppressants, oncology, anti-infectives, and antifungal. And we have leadership positions on many of these APIs that we manufacture. Of course, this is a very complex and a very challenging process wherein you're working with living microorganisms and ensuring that you consistently manufacture these kind of products is where you require a lot of expertise, and that's why you see very few companies in this space. We have built in significant capacities and capabilities over the years, and to achieve this leadership position. Currently, I think on the offer for sale, maybe Lalit can take you through on this.
As far as the transaction is concerned, it's complete 100% UFS, and this is for the Helix Quadria Capital, who have invested in the company in 2016. So there is complete OFX. There is no primary which is coming into the company.
Okay, understood that. Mr. Ved, if you could expand upon the kind of revenue mix that you have from your key verticals, and also if you could help us understand the current geographical mix as well. If you have your business internationally and in India, what's the kind of revenues that both of these geographies contribute to you?
Sure. So the core focus of our company continues to be the API segment, wherein we have the global leadership position. And currently, the API segment contributes close to around 80% of our revenues, and 20% is that from the finished formulation. We have built-in, capacities both at the API level as well as at the finished formulation level. So going forward, while the base will continue to increase for us, I think the mix is going to remain relatively the same, which is the split between API and formulation around 80-20.
Okay. Mr. Sethi, I'll come to you to help us understand a little bit more on your financial earnings as well. So far we have seen healthy growth on the top line and the bottom line. Somewhere around 28% is your margins on the EBITDA level as well. Your thoughts as to what is the outlook on the earnings? Is the margin on this level sustainable? We've seen higher margins in the past as well for you, for in the 30s as well. So what would be the ideal number that one should be looking at?
In fact, in last financial year, we clocked the sales of around 850 and 3 crores with EBITDA margin of 40%. 40.45% was our EBITDA margins.
Okay.
And our PAT margin was around 29%. And basically, this has been the kind of, in historical also, we are maintaining the same kind of margins. So going forward, we believe that the same kind of, margin profiling will be there.
Okay. Mr. Ved, your thoughts on the expansions? Currently, I believe we have about 3 manufacturing facilities right here. So, what's the expansion plan on that front? The capacity utilization levels currently? Any plans for CAPEX to build new facilities going forward?
So, as rightly said, we have three manufacturing facilities, two API and one finished. And we have just in 2021 commissioned a state-of-the-art manufacturing facility for fermentation API products, wherein we have built 800 meter cube of fermentation capacity vis-a-vis the 450 that we have at Unit 1. So we have increased our capacity by almost three folds. And just very recently, in June of this year, this site was also inspected by US FDA, and we successfully concluded that inspection with zero observations, 483 observations. So now the two units are at par, and we expect to slowly and steadily ramp up the capacity utilization at the Unit 3 facility that we built up. The Unit 1 facility is running to near peak utilization because that's been where much of the growth was coming prior to us setting up this new site. And in terms of the finished formulation, we have close to around 800 million units capacity to manufacture the oral solid dosage, which is tablets, capsules, and suspension, which is currently running at close to around 10 to 15% of the capacity utilization. So, given that, and given that we have enough room to kind of further grow with our existing capacities, we do not anticipate any further significant capex in the coming few years.
Okay. Mr. Sethi, could you dwell a little bit more on the debt on the books currently, and what's the situation right there? What can we expect going forward?
No, in fact, all the expansion which has taken place in the past, whether for expansion of the API capacity or expansion for the injectable units, most of the capital expenditure has been funded through the internal accruals. So as of today, the debts on the book is just 30 crores of rupees, against which there is a sufficient cash and bank balances to the extent of 176 crores of rupees. So net, there is a cash positive balance sheet, and there is nothing more leverage in the balance sheet.
Okay. Mr. Ved, since you were talking about that there are very less companies that are, in the same sphere that you work in, because it requires a lot of complexities and expertise to be in this area. Which are your competitors in the listed space, if you have mentioned that in your DRHP, and you could mention that?
So there are no direct competition per se, because of course other companies are also into different segments. But out of India, I would say that Biocon is one company from where we compete with them on around 4 molecules out of the 23 molecules that we currently manufacture. So we have continued to build on our expertise and further enhance our product portfolio over the last several years. Other than that, I would say that Teva, which is a global company, we have some competition from there in some of the markets. Okay. And then there are a few Southeast Asian players, such as CKD Bio or CCSB, from where we see some competition on some of our products. But again, it is, these are a handful of companies that you could name. And as rightly said, this space is very, very concentrated because of the expertise required here.
Okay. Could you also detail any more products that you would like to be foraying into, any new product categories that you have in your mind?
So we have a very strong pipeline of products. We have close to around 8 to 9 molecules that we are currently working on. And these are mainly in the segment of oncology, anti-infectives and antifungal, where we are currently putting all our efforts to develop.
Okay. Mr. Ved, any challenges that exist for you as a company or as the sector that you are in currently, and something that is on top of your radar that you would want to mitigate soon as you get listed?
So I think the risk which every pharma company carries is that of the regulatory risk, and companies have to keep investing in keeping their quality standards. And we have had a good track record with all the regulators. our first site has been inspected since 2005 by US FDA, and the last one for that was in 2019, which was with zero observations. And as I mentioned, that Unit 3 was just inspected last month, back in June, and which was again with zero observations. And Unit 2 is also approved by US FDA, which was happening in March of this year. So while we have got a very, very good track record with the inspections, but I think we have to keep investing in maintaining the highest quality standards, because that's a risk which these companies, all companies in this space, carry. I would say that this is one of the major risks that we foresee.
Sure, understood that. Well, many thanks, Mr. Ved, and many thanks, Mr. Seria, for being with us on the show and discussing all the insights. Here's wishing you all the very best. And once the company gets listed, we will look forward to speak to you again to get several more insights about the company and the future going forward.
Thank you,
Thank
Sakshi,
you
for
very
having
much.
us. Pleasure talking to you. Take care.
Thank you so much. And with that, we wrap up this quick edition. Do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets, as many things follow up right up on your screens too.
If you like the video, do like, comment, share and subscribe.